Four of the six most valuable companies in the entire United States are going to be announcing their earnings in the next few weeks. This earnings week is going to go down in history with big name players like Tesla, Apple, and Microsoft getting ready to announce how their final quarters of the year have gone. It's no question that 2020 has been an incredibly rough year for a lot of companies, but these big name players have managed to pull out profits and actually thrive in such a ridiculous and strange marketplace. And there's a lot of excitement about this huge tech-focused earnings week that's coming up. Tons and tons of articles are being tossed out mentioning just how influential this could be. With the S&P 500 hitting record highs as well as Tesla hitting record highs, this day actually they were testing 900, but went back down to around 880. There's a lot of hype, and there's tons and tons of huge institutional investors as well as retail investors that are more than ready to jump on these huge buys like Tesla and Apple. Tesla notably has had incredible vehicle deliveries, hitting record highs in 2020 and fantastic results in Q4 of 2020 especially. They gave a delivery target of 500,000 vehicles for 2020 around 4 years ago in their projection, and they've really been hitting that. They've been accelerating, building factories, and progressing surprisingly well. The company has not slowed down, and it's very obvious that a lot of investors want to get in on this Tesla train, or car, if you will. For many, it's a beautiful chart to see here. Tesla constantly peaking and peaking and peaking and trying out new numbers every single day. The company has simply made a name for itself and has shown that it has very competent management. Despite already being pretty dang large, if they can continue on the path they are currently at, there seems to be a lot of excitement and a lot of people chomping at the bits to get into Tesla. Apple is another very interesting case because last earnings, they didn't really give any guidance for future earnings because they said the current global situation is pretty unpredictable. And despite having very solid earnings and doing very, very well, great earnings per share and everything, their stock kind of plummeted, which was a little shocking to me. I took that opportunity to buy a decent amount, and I'm pretty happy that I did because it's consistently gone up. I think that initial shock of not having guidance was really drowned out by the fact that this is an insanely profitable company that has been accelerating and dominating in a lot of spaces. Recently, they've been putting their own silicon chips into their laptops, which have had very impressive performance per watt characteristics. The company is really, really raking in the profits, and with this aggressive vertical integration that they have with using their own silicon, they could very well be knocking it out of the park this quarter. And I think a lot of other investors acknowledge that too, because as we get closer and closer to earnings and get all this good news about Apple, the stock just seems to keep rising. And while earnings might just seem like earnings, they happen constantly throughout the year. This really does sort of feel like an inflection point. Technology and the tech sector has been so heavily dominating, especially with a lot of this work from home and reliance on technology. I still like a lot of traditional stocks. Ally Bank especially has absolutely blown earnings out of the water. I was very bullish on them, although it is kind of sad to see the stock drop, but over the long term, the market equalizes out at what the fair value is of a stock. Some of the reports that we see might actually shape a lot of what we see in the future. These companies are growing exponentially with their huge technology and monetary advantages. It really is a snowball effect. Assuming management isn't incompetent, a large tech company really is difficult to deal with or compete against. They can just get into so many different markets with all their funding, capabilities, and engineering talent. So this is certainly going to be a very interesting few weeks. If you really want to get in on high IV options, now is your time to do it. This is really more of a PSA of saying, hey, this next week is going to define a lot of companies, especially one that's getting more and more defined every single day, like Tesla. So just be aware of that and try to keep that in mind. Every single big earnings quarter is an opportunity, so think about what strategies you want to employ during this quarter. If you're interested in investing in the market with self-directed trading, a fantastic way to start is with Webull. If you sign up now using my referral link in the description of this video, you'll get 4 free stocks valued up to $3,700. You'll receive 2 free stocks when you open your account, valued between $2.50 to $250 each. And then if you deposit $100 or more, you'll receive 2 more free stocks valued between $800 and $1,600. All the money in your account is yours to invest, trade, or withdraw with as you please. There are 0 fees associated with depositing money. You just get your stocks and you'll get your buying power immediately. So if you want a fantastic mobile, desktop, and web trading brokerage, just use the link in the description below.